Well, on that note, let's welcome in Mr. Ed Yardeni, President at Yardeni Research. He's with us for some perspective. Mr. Yardeni, thanks so much for joining in. Good to have you in. Well, let's start first with this whole debate around tech. We've seen a cool-off last week, but do you think it's anything more than that? Is it looking a little worrisome now, the manner in which some of these stocks cooled off and sold off?
Right. No, well, it looks worrisome to some. I think that it's a very healthy pullback. It's hard to get a 1999, 2000 style meltdown in the stock market when there's so many people worrying about that. And so seeing some pullback, some correction in the AI stocks is a very healthy development. We're not going to see this thing feed on itself and turn into a economy-wide recession, because it's not going to turn into a stock market-wide bear market.
So then that brings me to the other point, and that's the lack of data. Now there seems to be some sort of effort to get a new agreement going. We'll see how that goes. But some of the data points that we had, for instance, I think there was a consumer sentiment, the Michigan survey. I think that at least was released. And yeah, all those points have been fairly negative. So what do you make of things?
Well, a lot of the survey data, even before the government shutdown, was very pessimistic, particularly the Consumer Sentiment Index. To be blunt, I think it's useless. It's been totally useless since the pandemic. It's been showing way too much pessimism, and yet consumers continue to spend. So I would, to a large extent, ignore it. The other concern was the Challenger layoff announcements.
Yes.
Also was of concern, but it was really all technology and it was all warehouses. And obviously, having layoffs is not a good development, but it certainly can explained by a tremendous increase in productivity. And productivity boosts overall economic growth. And a lot of these technology people, I think, will find jobs fairly quickly. Warehousing is a whole different story. We have a lot of robotics and automation there, but neither one of them reflects a weakness in demand for technology or for retail warehousing.
Ed, the win in New York, and I was wondering whether there will be a bit of a turnaround in trying to cut the size of the budget and that big, beautiful bill, etc., healthcare spending being cut. You think all that perhaps will be now on standstill? And maybe even a bit of a reversal, maybe some expansion compared to what people were penciling in?
Well, I don't think we're going to see major changes in Trump administration's policies, but the rhetoric will change. The Republicans, generally speaking, will not want to lose the affordability issue to the Democrats. They've seen what that can do in terms of upsetting the politics of New York City. So I think the Republicans are going to embrace at least talking about doing something about affordability. The president's also already been pushing on the drug side, and I think they'll just advertise it more. They'll be talking more about what they've done. They'll be talking more about how energy prices are very low. They may come up with policies that'll bring down food prices. So I think there'll be a widening of the net of policy making, but the basic approach of the administration won't change. I think they've already done everything that they really wanted to do on the tariff side. And I think even if the Supreme Court rules that the tariffs are unconstitutional, Trump will just say, well, that's okay because we did use the tariffs to renegotiate deals. These deals are here to stay. And he'll claim victory in that regard.
Hi, Ed. Morning. Good to see you. And as always, throughout the year, we've been having a bit of a revision in the S&P 500 target. I recall earlier we were talking ballpark 6,000, 6,500. The last time we chatted, you said maybe 7,000 as well is possible. Yeah. What's your call with regard to S&P 500? Where is it headed? Yeah. Because there are some calls that maybe it's peaking out, but I think you have been quite optimistic. And your view on the Indian markets as well. A rank underperformer just in the last 12 months or so. We're hoping that earnings come back and the economy picks up as well. So at current reckoning, your view?
Well, of course, India has had a few years of outstanding performance and having several months where the market is flat to down again, is a healthy development. You want to give the market a chance to catch up with earnings. Valuation multiples got a bit stretched. And now I agree with the Goldman call. I think the outlook for India is quite good, especially if the whole tariffs thing gets finally resolved and doesn't make headlines. I think there's still a tremendous amount of pressure to move production out of China and into other parts of the world, including India. With regards to the U.S., I usually don't change my forecast very often, but when Trump started talking about tariffs at the beginning of the year, I wrote that I reserve the right to change my opinion as often as the president does. So I try to stay flexible on the issue. But basically, I remained optimistic that we're in a bull market. I still believe that. I'm still using 7,000 by the end of the year. We could have further pullback, perhaps. But, if the government opens up, as we saw on Friday, that could be a positive development for the stock market. So the U.S. stock market, it's a bull market. I think everyone should stay with it.
Absolutely. And I think there's such a thing called seasonality that is also supportive, right? End of the year. 30 days
Correct.
to go for the end of the year, 35 days. Well, thanks very much, Ed. Good to speak with you, and
you.
really appreciate your time here on CNBC TV 18. We'll just